Welcome to the deep dive. Today we're getting into a really insightful book, The Monk and the Riddle by Randy Komisar.
Oh, yeah, Komisar. A Silicon Valley legend, really.
Exactly. And this book, it sort of boils down years of his experience in the startup trenches. Think of it like a guide to what really matters when building a business, beyond just the numbers.
Right. And what's so interesting is how he really challenges that conventional VC thinking.
He does, pushing past just the financials to look at, well, the purpose, the big idea behind it all.
Which is super valuable, I think, whether you're building something new or deciding where to put your money.
Totally. So our plan today is to walk through the book chapter by chapter and pull out those key lessons, for entrepreneurs, for investors, anyone interested in business mindset, really.
Sounds good. Lots to unpack there.
Okay, let's dive right in. Chapter 1, the pitch. And it kicks off with probably one of the most memorable pitches ever, funerals.com.
Yeah, that line. We're going to put the fun back into funerals.
Yeah.
You don't forget that one.
Not easily. What was Komisar's first thought, and what was Lenny actually pitching there?
Well, shock initially. But Lenny, he was all about creating this, disruptive, catchy brand. But underneath the shock value.
Pure market opportunity. His logic was simple. Everyone dies. Guaranteed demand.
A grim certainty,
Yeah.
And he made a pretty audacious comparison to make his point, didn't he?
Oh, yeah. He pitched funerals.com as becoming the Amazon.com of the funeral goods business.
Bold.
Very. His whole thing was the world's moving online, so this industry has to follow. Huge market, he argued, and nobody wants to touch it because, well, death is uncomfortable.
So he saw that discomfort as a barrier to entry that he could exploit.
Pretty much. And then he hit the numbers. High profit margins in the traditional funeral biz, he claimed.
And his angle was to undercut them.
Exactly. Offer convenience, information, better prices online, disrupt the old guard. He was projecting, $100 million in revenue in 3 years?
Ambitious, definitely. But interesting, too, his focus on profit so early on. How did that fit with the dot-com boom mentality back then? Growth over everything.
That's a great point. It was kind of countercultural, wasn't it? Everyone else was chasing eyeballs, market share. Burn rates were badges of honor, almost. Lenny talking profits, a bit different.
Yeah, most VCs then wanted to see that land grab first.
And this whole pitch, it happened at a classic Silicon Valley spot, right?
The Conditorre. Yeah, legendary place. So many deals probably started or died over coffee there.
Adds a bit of color, doesn't it? Even mentions interrupting for a decaf. Real life intruding on the pitch.
Yeah. So, okay, the pitch is made. But Komisar keeps talking to Lenny. Chapter 2, the rules of the game. Why stick with it?
Well, Komisar talks about this deep respect he has for people who take big risks for their beliefs.
Like entrepreneurs. And immigrants, he mentions his family background.
Exactly. Seeing that same courageous spirit in founders,
Yeah.
betting it all on an idea.
It resonates with him. So this chapter introduces those famous VC threshold questions, the first hurdles.
Right. The basic sniff test. What are they again?
Pretty straightforward, really. 1, is the market big enough? 2, can you actually win a decent chunk of it? And 3, does the team have what it takes?
Okay, standard stuff. So how did funerals.com measure up against those? Market size first.
Lenny said $14 billion a year for all funeral goods in the U.S. But the online part, the piece funerals.com could actually go after, was maybe $4 or $5 billion.
Still a big number, but Komisar had doubts, right, about how fast people would actually start buying caskets online.
Exactly. It's a very traditional relationship-based purchase usually. Would people just click and buy? And even if they did.
Lenny's $100 million projection, while big, wasn't exactly market domination of that $4 or $5 billion, was it?
No. Maybe 10% or so of the online piece after 3 years. VCs, especially top-tier ones, they're looking for potential market leaders, companies that can really own a space. It raised questions about the upside.
Fair enough. Okay, second question. Competitive advantage. How are they going to fend off others?
That was a big one. Lenny's strategy seemed to be mostly price, convenience, info. Things that are, frankly, pretty easy to copy.
So no secret sauce. No real moat around the business.
Not obviously, no. What stops a big funeral home chain from launching their own site? Or Amazon itself, even? It wasn't clear how funerals.com would defend its turf.
Okay, makes sense. And the third hurdle, the team. What were the red flags there?
Well, besides Lenny, there was only one other founder mentioned, right? A marketing manager from a funeral home chain.
Industry knowledge, sure, but startup experience.
Seemed lacking, and Komisar hammers this point home. VCs invest in people first. They need to see intelligence, sure, but also resilience, flexibility, the ability to pivot, and ideally, some experience navigating startup chaos.
Because it is chaos sometimes.
Always. You need people who've been through it who can adapt when things inevitably go sideways.
And Lenny maybe didn't quite get the VC role there, thinking the money would just bring the talent.
Yeah, he seemed to think funding equals instant expertise. But Komisar clarifies, VCs provide capital for a return. They expect the core team to be capable. Management talent is often the biggest bottleneck.
Okay. The chapter also gets into the specifics of the ask, right? The money and the valuation.
Lenny wanted $5 million at a $25 million pre-money valuation.
Which Komisar thought was.
Pretty rich.
Yeah.
Very high for an early-stage company with lots of risk, no real assets, no track record. Lead VCs usually want a bigger chunk, maybe 40%, for taking that early risk.
And Komisar makes that great point about momentum being more important than just the highest valuation number.
Crucial point for founders. Don't just chase the highest paper value. Getting the right investors on board, people with experience, networks, credibility that can be worth way more in the long run.
Even if it means a slightly lower valuation up front. Build momentum.
Exactly. The right partners help you raise the next round. Open doors. He also mentions raising enough cash to actually survive. Don't optimize for dilution so much that you run out of runway.
Fatal mistake. Okay, so the chapter wraps up with Lenny's exit plan and Komisar starting to poke at his real motivation.
Lenny's plan was simple. Sell out to a big web retailer in 2-3 years. Get rich quick, basically.
Standard.com dream, then.
Pretty much. But Komisar pushes him. What's driving you besides the money? He senses that maybe, just maybe, a lack of deeper purpose could be an issue down the road.
Which leads perfectly into Chapter 3, the virtual CEO.
Right. Komisar introduces his own role here. What exactly is a virtual CEO?
It's like an experienced guide, right? A mentor, an advisor for founders who might be brilliant but lack certain experience.
A sounding board, providing strategic insight based on their own scars and wins.
Yeah, but crucially, not the actual boss. The real CEO still makes the calls, runs the show. The virtual CEO is there to help them succeed.
Got it. And Komisar gives Lenny some pretty blunt feedback in this chapter related to that motivation question.
He really does. He challenges him directly. What's the deeper reason for funerals.com? If it's just money, he suggests, it might not be enough to sustain it, to make it truly great.
Which ties into this idea of the deferred life plan, a term Komisar introduces here. What's that about?
Oh, this is classic Silicon Valley, maybe classic everywhere. It's the idea that you buckle down, do the hard slog now, build the career, make the money.
So that later, someday, you can finally do what you really want to do. Your passions, your hobbies, whatever.
Exactly. Postponing fulfillment until you've made it.
And Komisar's pretty critical of that whole mindset, isn't he?
Very. He points out the big flaws. Like, it creates this false divide between have to do and want to do, implying the have to part is inherently miserable.
And the big risk.
Right.
What if you never actually get to that later?
Right. Especially in startups, failure rates are high. Even funded ones fold. That someday might just never come. You might spend years doing something you don't love, waiting for a payday that doesn't materialize.
A dangerous gamble.
Mm-hmm.
Komisar then shares some of his own story, right? His early ventures versus his serious career.
Yeah, he talks about Banzini Brothers, this early thing driven by pure passion for music. Loved it,
Yeah.
but then felt pressure to get serious.
Law school, litigation.
Yep. And quickly realized it wasn't him. No real satisfaction there.
So how did he get back towards tech and eventually Apple?
Well, moving into tech law in Palo Alto got him closer to the innovation buzz again and the Apple opportunity. He says it wasn't just a career move, it was a gut feeling.
The mission.
Yeah, Apple's mission back then, computing for the rest of us, it resonated. It was bigger than just profits, a real contrast to the law firm's focus on just climbing the ladder.
Which brings him back around to Lenny. That core question he asks him.
The killer question. What would it take for you to be willing to spend the rest of your life on funerals.com?
Oof, yeah. That really cuts to the chase, doesn't it? About intrinsic motivation, about needing something more than just an exit strategy to get you through the tough times.
Exactly. And that sets up Chapter 4, where he digs even deeper into this deferred life plan idea.
Right. So, Chapter 4. What else does he say is wrong with deferring your life?
He argues it creates this damaging split. It implies the work you have to do now is somehow separate from who you really are.
Which can then justify less savory behavior.
Potentially. The whole it's just business thing. It allows you to distance your real self from your actions if you see the current phase as just a temporary, unpleasant means to an end. Instead of finding meaning in the hard work itself right now, doing it because it matters to you, not just as a ticket to something else later.
He uses his time as CEO of Crystal Dynamics as an example here, right? A cautionary tale.
Absolutely. He joined this video game company, Crystal Dynamics, partly based on his track record, investor expectations. Maybe not deep personal passion for those specific kinds of games.
His interest was more in interactive storytelling, wasn't it? A subtle but important difference.
Right. And that mismatch, it created friction inside the company.
Between the creative side and the sales side.
Yeah, clashing visions, struggles to execute the plan. And Komisar himself felt torn, professionally driven to make it work, but personally, not really passionate about the core product.
That's a tough spot for a CEO.
Definitely. Which led to a pretty major decision for him.
He resigned, right?
Yeah. He realized what was best for the company's existing path wasn't actually right for him. A painful but necessary choice. And his key people left too afterwards.
Wow. So the chapter really drives home that need for alignment between your work and your passion. Avoid the exit strategy trap.
Totally. Find the meaning now. Which leads us nicely into Chapter 5, the romance, not the finance.
Okay, so this chapter doubles down on the critique of the deferred life plan. That the unsatisfying first step isn't actually necessary.
Exactly. Komisar argues that whole premise is flawed. The danger is you separate your values, your passions from your work now, and you might never get them back together. You risk ending up, well, empty.
Even with financial success.
Right. The narrative then swings back to Lenny and funerals.com. Komisar sends him an email.
He does. Following up, basically saying, hey, I'm still not hearing the romance here. Where's the excitement beyond making money?
And Lenny's reply, still defensive.
Pretty much. Focused on his business smarts, promising the deeper stuff would come after they were successful. That deferred life plan again.
Textbook. But then Komisar does some digging online, finds Lenny's personal website.
Ah, yes. The memorial to his father, Jack Dolan.
Yeah. Portrayed as this frustrated gardener, worked hard his whole life, short retirement, then gone.
And Komisar connects that to Lenny's drive. Maybe trying desperately not to follow that path. Seeing quick financial success as the escape route.
That's the interpretation, a potential subconscious driver behind the relentless focus on the exit.
Which makes sense, but Komisar still warns him.
That just chasing the money, even with that motivation, likely won't lead to real satisfaction. You need the romance, too.
Which sets up Chapter 6, the big idea, offering a contrast.
Exactly. We shift gears to TiVo, a company built around a big idea from the start.
What was TiVo's big idea?
Revolutionizing TV, basically. Giving viewers control, pause, rewind, record live TV, making it active, not passive.
A fundamental shift in the experience. And they got serious attention early on.
Oh yeah, big names, serious funding. And crucially, Komisar notes, the founders saw the IPO not as the end goal, but as a milestone toward achieving that bigger vision of changing entertainment.
A different mindset entirely from Lenny's sellout plan. But Komisar had some initial doubts about TiVo's approach, didn't he? Particularly the hardware focus.
He did. Based on his own, sometimes painful experiences at Jugo and WebTV, he knew consumer hardware was tough.
High costs, complex manufacturing, distribution headaches, often thin margins.
All of it. He thought the real long-term value wasn't just the box, but the services the box enabled. Personalization, maybe targeted ads down the line.
So he actually advised them to shift focus.
Yeah, he suggested they emphasize the services side more, warn them about being the pioneer with arrows in their backs, doing all the hard work of educating the market, only for bigger players to swoop in later.
A classic Silicon Valley risk. Did TiVo eventually pivot their thinking?
They did evolve, yeah. They started to understand the power of segmenting their audience, learning viewing habits. That opened doors to more personalized services and, yes, targeted advertising potential. The value beyond the box.
Interesting. The chapter also touches on IPO prep and something about Komisar's title.
Just a brief mention of the SEC hurdles, the legal stuff. And yeah, apparently the SEC questioned his virtual CEO title, thought it might confuse investors. Bureaucracy, you know.
Oh, figures. But then the chapter loops back to funerals.com again through Lenny's partner, Allison, an email exchange.
Right. Allison emails Komisar, and she's clearly uneasy.
About the direction Lenny's taking things.
Exactly. She says their original motivation, the real heart of it, was about helping people through grief and loss. Supporting them.
And she felt that was getting lost.
Completely overshadowed by Lenny's focus on just selling cheaper caskets online. The economics were crowding out the empathy, basically.
Ah, the core conflict surfaces. Her compassionate vision versus his business-first approach.
Precisely. And this reminds Komisar of a big moment at Apple, the decision not to license the Mac OS.
To Apollo Computer, right? He sees that as a major strategic mistake.
He does. They had a deal, basically, but Apple backed out, wanting to protect their high-margin hardware business. Komisar thinks it potentially cost them huge market share and ecosystem growth in the long run.
Sacrificing the big idea. Easy computing for everyone, for the sake of the existing business model.
That's the argument. The business model should serve the big idea. When you lose sight of that core purpose, you risk losing everything: market, employees, momentum.
A powerful lesson.
Yeah.
Which brings us to Chapter 7, the bottom line.
Okay, Chapter 7. Komisar looks at Lenny's revised business plan. Any major changes? Still focused on caskets.
Fundamentally, yes. He had made some tactical tweaks, refined the market stuff, identified some referral partners maybe, but the core was still better, faster, cheaper caskets online.
So it's still no compelling big idea.
Still missing, yeah. Which leads to another meeting at the conditori, this time with Allison there too.
And Allison speaks up.
She does. She voices her concerns about Lenny, pitching purely on price to this investor, Frank. She reminds Lenny that their original spark, the meaningful part, was about the emotional side, helping people dealing with loss.
She was worried that helping people part would just get pushed off forever, wasn't she? Always secondary to the e-commerce engine.
Exactly. That it would be the someday part of the deferred life plan, perpetually deferred.
And Lenny's reaction, still focused on the practical hurdles of her vision.
Pretty much. He starts questioning the community aspect. How would it work? What would it cost? How do you get users? Deal with funeral directors? A very pragmatic, almost defensive response.
Interesting. And this prompts Komisar to reflect on his own journey, his early days as a negotiator.
Yeah, he admits he used to be totally focused on just winning the deal. Didn't really get the human side of business back then.
Until Bill Campbell came along.
Oh, Bill Campbell,
Oh.
the legendary coach. His influence was huge, right?
Completely changed Komisar's perspective. Campbell's whole philosophy was that business is fundamentally about people. Customers, employees, partners. Komisar saw it firsthand when they worked together at Claris.
But Komisar resisted that at first. Preferred the hard numbers.
Yeah, he thought all that soft stuff about people and relationships was less efficient, harder to measure than just focusing on the bottom line. Seemed less like real business to him initially.
Until a specific deal blew up in his face. The Quark negotiation.
That was the turning point. He admits he totally messed it up because he was too aggressive, too focused on his own side, and completely failed to understand or empathize with what Quark needed.
A painful but valuable lesson.
Definitely woke him up. He realized empathy and building actual relationships weren't just nice to have. They were essential for successful deals, for sustainable business.
So he fundamentally changed his approach after that.
Absolutely. Started focusing on shared interests, understanding the other side, building trust, not just winning, but creating win-win situations.
And he brings us back to Lenny and Allison talking about the chain of values.
Yeah, he tells them that for long-term success, you need that alignment. Values have to flow from leadership right down to the people interacting with customers. Culture, principles, that's the glue that holds it all together.
Crucial stuff. Setting up Chapter 8, the art of leadership.
Right. Chapter 8 kicks off with the news from Frank, the investor Lenny pitched. What was the verdict?
Frank passed. He saw potential in Lenny, sure, but failfunerals.com lacked a clear direction, a truly exciting vision. It wasn't compelling enough.
Which highlights that difference again, just an opportunistic play versus something driven like a real big idea.
Exactly. Frank felt Lenny was stuck on the discount casket idea, not embracing the bigger, potentially more meaningful vision Allison had hinted at. VCs want passion and big ideas for big markets.
Makes sense. And this chapter really dissects the difference between management and leadership. Key distinction.
Super important. Management, Komisar says, is more about process, execution, hitting targets, budgets, keeping the trains running on time.
Whereas leadership.
Leadership is about character, vision, inspiring people to act, especially when things are uncertain, rallying them around a purpose, even when the path isn't totally clear.
And Komisar admits he didn't always appreciate that difference early on.
No, he credits Bill Campbell again for really teaching him that, learning by watching him.
He shares some specific examples, right? Go Corporation, LucasArts.
Yeah, Go, he was the operations guy, the CFO VP Ops, focused on execution under Campbell's leadership. Then, interviewing for CEO at LucasArts.
Debbie Biondolillo gave him some key feedback.
Crucial feedback. She told him they weren't just looking for a manager to run the place. They needed a leader with a vision for the future of interactive entertainment.
Which pushed him to really develop that vision.
Exactly. He articulated his vision for interactive storytelling, and that's what got him the job. It wasn't just about managing the existing Star Wars games.
And his experience as virtual CEO at Web TV, supporting Steve Perlman.
Another great example. Perlman was the visionary founder. Komisar's role was to support that vision, even when the business model was still, fuzzy. There was tension, though, between the vision and the need for a solid business case.
Oh, yeah. Constant tension between needing to make the economics work and Perlman wanting to push his enhanced TV vision, which was way beyond just internet on your TV.
But Perlman's bigger vision ultimately paid off.
Big time. It led directly to the Microsoft acquisition. Komisar's point is that visionary leadership is absolutely vital in a startup's early days. If you try to turn it into just an operational company too soon, you can kill its potential.
Don't stifle the magic too early. Got it. Okay, Chapter 9. The gamble.
So, Chapter 9. Frank has passed on funerals.com. Lenny's at a crossroads. How's Komisar feeling?
Well, he understands Frank's decision, but he also feels that connection to Allison's vision, that community idea. He genuinely hopes they can make that work if Lenny can truly embrace it.
The chapter then talks about risk in Silicon Valley. It's viewed differently there, isn't it?
Totally. It's less about avoiding failure and more about maximizing the chance of huge success. Failure's almost expected as part of innovation.
As long as it's not, like, stupid failure.
Right. Failure due to market shifts, tech changes, honest attempts, that's usually forgiven. Stupidity, laziness, dishonesty, not so much.
And failing for the right reasons can actually open doors later.
Often, yeah. People who've been through a noble failure learn a ton, and the Valley respects that resilience and experience. It can make them more sought after.
Interesting. But Komisar then pivots to talk about personal risk, not just business risk.
This is critical. He says, don't just think about the company failing. Think about the risks to you.
Like
the risk of working somewhere without respect, the risk of compromising your values, the risk of spending years doing something you just don't care about, and the biggest risk,
deferring your passions indefinitely, the deferred life plan again.
Exactly. That risk of looking back with regret. He uses his own leap from law to Apple as an example.
Choosing the uncertainty of Apple over the safe path of law because it aligned better with what he wanted his life to be about.
Right. Embracing personal risk for the sake of potential fulfillment, rather than risking a life of quiet desperation, you might say.
Which leads to that contract, whole life plan versus deferred life plan.
Yeah. The whole life plan is about integrating passion and purpose now. Finding meaning in the present, not waiting for someday.
Because someday is a gamble.
A big one. He urges us to align our time with what truly matters. And the chapter ends with that powerful reflection on what lasts.
Wealth and power fade. He mentions Rembrandt, Sam Walton.
Right. What endures is the impact of meaningful work. And that question he leaves us with. If this was your last day, would you be happy with how you spent it?
Heavy stuff, which sets up the final chapter, Chapter 10, the whole life plan, and a surprise twist.
A big one. Lenny and Allison come back, unexpectedly, and they have a totally new plan.
Not funerals.com anymore.
Nope. Circleoflife.com. Same general area loss, remembrance, but the whole vibe, the whole concept is different. Clearly, some serious soul-searching happened.
So what was circleof-life.com? What was the new vision?
Instead of just selling caskets, the idea was to build a caring online community, a place for people dealing with loss to connect, find support, share experiences, access resources. In the business model, basic service free, revenue from qualified leads to vetted partners like good local funeral homes, free access for relevant nonprofits, a completely different philosophy.
Sounds much more aligned with Allison's original feelings. What kinds of features did they envision?
Things like forums for family caregivers, resource directories, maybe partnerships with healthcare or religious groups. The big vision was this supportive network, especially for families spread out geographically, to navigate illness and grief together.
And they actually got funding for this new idea.
Yep, $500,000 in seed money. And get this, from angels who had rejected the original funerals.com pitch.
Wow. That says a lot. The shift in purpose clearly resonated. How did Komisar react to this new plan?
Much more positively. He called it a reliable compass. Acknowledged the unknowns, but liked the learning-based approach. He saw it as a richer idea, broader horizon, addressing a real human need.
The romance was back,
Seems like it. And Allison had this bigger vision too, right? Beyond just immediate grief support.
Yeah, she saw it potentially evolving into something facilitating genealogical connections, preserving family stories, building community across generations.
Using tech for connection and meaning, not just commerce.
Exactly. And Komisar's final take on circle-of-life.com.
Cautiously optimistic, but hopeful. He basically says, something like it will work. The tech exists, the need exists. It just needs someone to put it together with the right approach, the right heart.
A much more positive note to end that story on. Which brings us to the epilogue, the road.
Yeah, a short philosophical wrap-up. What's the main takeaway here?
Super simple, but profound. The journey is the reward. There is nothing else. Focus on the process, the learning, the striving. That's where the real value is, not just the destination.
He uses that story from Scotland to illustrate it.
Yeah.
Getting stranded.
Right. His plans got messed up. He was initially frustrated, trying to stick to the itinerary. But then he had this realization.
Just embrace the moment, the unexpected path.
Exactly. He ditched the plan, opened himself up to serendipity, and had a much richer, more memorable experience because of it.
A great metaphor for life and for building a business too, maybe.
Totally. It ties all the book's themes together, finding meaning now, embracing the process. Life is the adventure.
Beautifully put. So, wrapping up our deep dive on the monk and the riddle, what are those core business mindset lessons we should take away?
I think number one is purpose beyond profit. It's essential. Then the power of a truly compelling big idea that solves a real problem.
Strong leadership rooted in vision, not just management mechanics. And remembering that business is fundamentally about people and relationships.
Yeah.
Build a strong culture.
Definitely. And how does the book really challenge that traditional investment thinking?
It forces you to look past just the spreadsheet, to evaluate the founders, their passion, their vision, the why behind the what. Is this venture creating real, meaningful value? Those qualitative factors matter, maybe more than the initial projections.
So key takeaways then for entrepreneurs starting out.
Find your romance first, that genuine passion and purpose. Think long-term impact. Build a great team with shared values. And crucially, try to enjoy the journey. Learn from the bumps.
And for the early stage investors listening,
Look deeper than the pitch deck. Assess the founder's real motivation. Is there a vision you believe in? Is it creating meaningful value? And remember, calculated risks and occasional failures are part of the game if you're backing truly innovative ideas.
absolutely. It leaves you thinking, doesn't it? What's that final provocative question the book implicitly asks?
It makes you wonder, what riddle are you facing right now in your own work or life? And could shifting focus from the destination, the exit, to the journey itself change how you approach it?
Yeah, it's a call to examine our own deferred life plans. Are we putting off what truly matters? How can we bring more passion, more purpose into what we're doing today?
A lot to chew on there. Great book.
Definitely. Thanks for joining us for this deep dive.